Hello, everyone. Welcome. I'm Maggie Jacqua. I am the editor-in-chief of Whole Foods Magazine, and I would like to thank you for joining us for this presentation. We're going to learn more about Whole Foods Magazine's 43rd Annual Retailer Survey. 43 years, that is impressive. And we're also going to talk about Retail Insights 2021 Retail Universe for premium natural organic food, supplement, and personal care sales. This year's survey is, and this webinar are sponsored by Nutrisource. Nutrisource is a go-to source to help with all areas of product development. Definitely do surf over to the Nutrisource website later to check out how they can help you achieve your goals. And my thanks to Nutrisource for helping us to put on this webinar. All right. Today, as always on our survey webinars, I'm joined by Jay Jacobowitz. Jay is the president and founder of Retail Insights, as well as the merchandising editor of Whole Foods Magazine. Welcome, Jay.
Thank you, Maggie. Glad to be here.
All right, glad to have you. Okay, before we dive in, just a few quick housekeeping points. Jay and I are going to be presenting data and insights, and at the end of this presentation, we will answer all your questions. So please do join us in the conversation. At any time during the presentation, you can post your questions into the Q&A box, and any other comments you can post in the chat. But please do post those cues in the Q&A. That's where we're going to be sure to see them. And now let's just take a quick moment to see who's joining us today. Please take a moment to respond to a quick poll coming up on your screen now and let us know who you are. We'll get that up in a second. All right, so we have a lot of retailers out there. We have brands and manufacturers, a few ingredient suppliers, and some other people have joined us, and we welcome you all. Excellent. All right, it is survey time. So some quick background to put the data that's to come into perspective. Once again, this year, Whole Foods partnered with Redex Research to gather results for a 12-month period. This year, that survey period ends in June 2020, and that means we have insight into the true impact of COVID-19 on retailers in those early days. So these are going to be some really interesting findings to talk through. One of the reasons that this survey gives such an accurate picture of independent natural products retailing in the US is the quality of the respondents that pull in for this. And to everybody, all the independents who took time to fill out the survey and to fill it out completely, thank you. It is so valuable to the industry that you take the time to do that, and we so appreciate it. We did have input from retailers large and small and from every region of the country, as you can see here. And this is the key to giving us an in-depth picture of the industry. So you can see the areas represented. Mountain region, we'd love to see you come out more for next year's survey. At the end, I'll tell you how you can get involved. In terms of market area, we have respondents from rural areas with population of less than 50,000 up to metro areas with population of more than 1 million, and every market size in between. Some fast facts: most respondents, 76%, operate one store. 65% of respondent stores have never changed hands, and they've been in business for an average of 29 total years. So we just have such a great deal of experience and success and commitment being reflected here in this survey. A little more background to keep in mind as we dive deeper into the findings. Each year, a changing group of stores responds to the survey. So we deal with this two ways. We compare each year's survey respondents to the prior year's respondents. And we also ask retailers to tell us how they did compared to their own same store sales a year ago. So you're looking at both things here, and we'll explain that as we go through. But the bottom line for our survey period is total sales. And for all groups in the survey, comparing this year's same store sales to last year's, we have average sales per store of $2,218,053. Overall average year-over-year growth was 111,000 and change, and that is up 5.02%. So to keep in mind, we have stores of all sizes responding, and those figures that I just mentioned are an average of all groups. In just a moment, Jay is going to talk us through and explain about the groups and why we do that. And you'll see as we progress that some groups did fare better than others. And coming up, we'll also take a look at what drove sales and what got us to that 5.02%. But first, I'm going to turn this over to Jay. Jay, please tell us about how this slice of sales from our survey respondents fits into the overall industry.
Okay, Maggie, thanks. So there are a number of moving parts to the survey. The survey asks independent natural products retailers, the piece of the pie that you see sticking out on the right, that's kind of purple, 12.21% of the total food industry. So what you're looking at is 8 channels altogether. This pie makes up the Retail Insights 2021 retail universe. And those of you who have looked at the Whole Foods Magazine survey, it is the last 2 pages of the survey. So actually, it is our Retail Insights data that looks at all 8 channels of retailers. And we're going to talk about that at the end of this webinar. The webinar itself, of course, the main body of the webinar has to do with just the independent retailers and co-ops in the 12.21% channel. So we'll be looking at all this. Just kind of a quick advanced supernaturals have the largest share still, followed by compact grocers, and we'll talk about who those are when we get to it at the end, and conventional supermarkets. So the big 4 groups are these 4, and everything else sort of really drops off and lags. But what we have for the 8 channels this year was 92.8 billion in total natural sales and market share. And that was a nice big increase. And we'll talk more in detail as we move through to the end of the webinar. So what occurred to us many years ago is that what makes a store different, natural food store different from one another, is the amount of fresh foods that they sell. So if you can imagine a whole food store, which has 55, 60% or even more of their sales generated from fresh perishables, that's everything that requires refrigeration or freezing. So deli, bakery, dairy, and so forth. So if a store has a lot of those fresh perishables, they're going to have a larger footprint. They're going to pay more for labor. They're going to have higher sales, and they're going to have higher customer counts. On the other end of the industry, stores that focus on supplements and vitamins, imagine a vitamin shop or a GNC, if you will, have very little, almost zero fresh perishables. And that's a different kind of store, but they both exist in the same industry, and in fact, in the same sector of the food industry, and the natural foods, organic food sector. So it's very important for you, and I think next slide, please, to understand the survey findings is to tally up your sales from the 4 main fresh food categories: produce, refrigerated foods, frozen foods, and prepared foods. You need to know what percentage of sales those 4 categories make up of your total sales. Then you can compare your results to the stores in groups 1 through 6, group 1 being the high perishable stores, as I said, similar to Whole Foods Market, group 6 being much more similar to stores like GNC and Vitamin Shop. So if you must look through this filter in order to really understand the findings that apply and are most relevant to your store. So what we have here is an illustration of the difference in perishable sales. And as you can see on the left, the tall green bar, group 1, had more than 50% of sales from fresh perishables. Group 2, 31 to 49%. Group 3, 21 to 30%. And I'm going to be making some remarks about group 3 this year because of some interesting things that happened to them. Group 4, 11 to 20%. Group 5, 1 to 10%. And group 6, 0%. Although these pill stores, supplement focused stores, probably have some probiotics in the cooler, but they don't let us know what those sales are, and they probably don't count them. And here we are looking at the 2 years of the survey, current year on the left-hand column, 2021, and last year's survey group 2020. As Maggie said earlier, each year we put the survey out and a different group responds. Many of the same people respond, but there are always new entries coming in. And so that makes for some differences that we see. And so what you have is group one looks similar, high 50% of sales from perishables. Group two looks similar. Group three had a slight drop off in perishable sales, 24.6 this year versus 26% last year. Group four, on the other hand, had an increase in perishables, 16.6% versus 13.1 last year. Group five, again, a slight increase in perishables, and group six, no perishables in either year. And here's another visual illustration to show what the product mix looks like in these two types of stores, or this range of sales from group one to group six. On the left-hand side, group one, which you see circled there, has nearly 60% of sales from perishables. That's the red bar graph. And I think next slide. On the right-hand side, while group six, again, a store like a Vitamin Shop or a GNC, has almost no perishable sales, that red line drops to 0, but the blue line hits almost 80%. So that gives you the kind of variability that we're looking in the group of respondents to the survey. And one of the interesting things that happened with this year's group versus last year's group, this year in red, the red bars, in group one, the stores were closer to 10,000 square feet. Last year, that group, the group one, had stores that were 15,000 square feet. And although it's not highlighted, look at group two right next door to group one. Group two stores actually increased in size this year to 9,400 square feet, whereas last year they were 7,000 square feet. So again, different participants give us their information in the survey, and this is one of the things that I wanted to point out to you that's a difference this year. Oh, okay, there we go. We've done that. Okay. Here we are with total sales, again, 2021 versus 2020. I'm not going to make you go through all these columns, but the interesting thing about this is that although the store sizes were different and the volumes were different, just to take a look at group one, for instance, 7 million in sales this year, 10 million last year. And again, the store size was different as well. The stores were larger last year at 15,000 square feet in group one, 10,000 this year. So that's understandable that they'd have less sales. But take a look at the two right-hand columns. The sales per square foot, very similar regardless. So it's very interesting that the perishables really do drive results, because the percentage of perishables kind of held constant between 2020 and 2021. And in fact, the sales per square foot did as well. So what we saw were some changes in sales per square foot. Some of the big changes, again, I told you I was going to talk about group three, that 21 to 30% perishables group. They lost 8% of sales per square foot. So just some interesting changes there. Okay, and here is a graph showing our sales per retail area, which is the red bar above, and sales per gross lease area square foot, the blue bar below. So if you are measuring a smaller area, like just your retail area, you're going to do more sales per square foot, obviously. And the biggest difference, as you can see in group one, $939 per square foot. When we look at the entire footprint for that store, and generally in group one, about 30% was backroom, 70% was retail area. The sales per square foot are much less, $674. But as you can see, there is a correlation between GLA and retail area. Okay, one of the most interesting and I think useful tables that we have here, and some of the most interesting information for the industry, is inventory turns. The blue number is retail inventory value. The red number is wholesale inventory value. And as you look at the arrow pointing to group one, again, these were the high perishable stores. They had more than 50% of sales from perishables. They turned their inventory over 18 times a year. Next slide, please. And at the other end, stores that focused on supplements and vitamins turned their inventory just under 5 times a year. And so there is a linear correlation as you go through each of the groups. Their inventory turns slow down in a linear fashion.
All right, Jay, now we're going to look at shopping and spending. Our findings consistently tell us that customers per day increase with store size and percentage of the fresh perishable foods. And this year, that range starts at the low of 36 customers per day in stores that sell no perishables. And then it's just a steady increase as you go from group 6 up to group 1, with 472 customers per day in stores that get at least 50% of sales from perishables. Looking at basket size, average basket size, there's a range of just over $35 in group 4 on the low end to a high of just over $43 in group 1, and those are the high perishable food stores. So just pausing to take a look at group 4 on the low end of basket size, group 4 gets 11 to 20% of its sales from perishables, and group 4 stores are 2,300 square feet GLA on average. So it might be that group 4's size, the smaller size and the smaller offering of fresh foods just isn't enough to pull in a daily grocery shopping crowd, and that could be bringing the average basket size down. If we take a look at group 5 though, compared to group 4, group 5 is a little smaller still, averaging 1,900 square feet, and they get less traffic with 60 customers per day, but their average basket size is on the higher end at $41.20. And so they're focusing on dietary supplements in these stores, and that is certainly helping them there. All right, what's selling? So every year we ask about what's selling, and this really is no surprise given that COVID is factored into our survey period, but demand was high for immune support. 62% of those who responded called out the immune support category. Specifically elderberry, vitamin C and D, and zinc were mentioned. And I think this is, correlating with what we've seen throughout the industry and throughout COVID. Of course, there was a negative impact of supply chain challenges. And one retailer told us that their biggest challenge was supply chain during those COVID days. They said that if they had had enough inventory to sell, it would have been a record year, but they didn't. And we heard from independents in some of our open-ended question in the survey who really struggled on that front. One was a 1,000 square foot store, so a small store, been in business for over 50 years, so very established. They told us that March was their biggest month ever, with almost twice their monthly average. But then they went out of stock on immune products that people were looking for, and they said getting new stock was almost impossible. They told us that their major distributor was shipping pallets to the bigger chains and not pulling the smaller orders for the independents, and that really hurt them. There's more insights like that in our January 2021 issue of Whole Foods, where the retailers shared their perspective and what happened. So some good insights there to check out. People did turn to different brands when they couldn't find their brands, and they also turned to private label, which is trending up. 57% of respondents in this year's survey said that they offer private label, and that's up from 33% in prior years, so really seeing growth there. Just a quick note that on top of the supplement out of stocks, inventory for meat was an issue, as we all remember, and it also hurt that stores had to close their prepared food departments. So let's just take a moment to look at online. 61% of our respondents did not sell online, and of those that did, 23% generated less than 10% of sales from online shopping. And again, in our open-ended response section, one retailer told us that at the start of COVID, sales were mostly up except in the wellness category, and they kind of pondered that perhaps that was because people were buying more from online retailers in those early days when people were, apprehensive to go into the store. Another retailer noted the problem with out of stocks from distributors and said that, the break in availability was causing regular customers to turn to the internet. So that hurt. And another respondent noted that some customers were getting used to shopping online and that was hurting sales. So, as we continue to follow this in future surveys, we'll see how that shakes out. Delivery. Okay, so we did not ask about curbside pickup, and we will do that going forward. That would have, been something this year that became very relevant. But looking at delivery, more stores are doing it. In last year's survey, 40% of respondents said that they did not offer delivery, and this year that number is down to 34%. So more people are offering delivery. And more are delivering direct and through third parties. We had roughly 12% offered that last year, up to 20% offering that this year. So there's growth there. Education and outreach. Okay, so this is always essential, but especially in those early days of COVID, when there was so much misinformation and there was so much hunger for information and so much urgency to learn. So this is looking at the whole 12-month survey period, obviously. So the pre-COVID months are included in this, but taking a look at what independents are favoring, in-store sampling and demos top the list again this year. Nearly 3/4 of respondents offer that. And that's basically the same as the prior year. Educational handouts are popular at 61%. Social media and blogs are up there as well at 58%. That's actually slightly down from the year before, which was 63%, but 58% are still doing that. And then there's 7% who aren't offering any supplemental educational material. That's about the same, slightly higher than last year, but kind of surprising that nothing's being passed out and passed on in those stores. Okay, so now we just have another quick question for you. We're going to have a poll up on the screen. We're wondering, how have you modified your promotional activity post-COVID? So take a minute to respond to that. Let us know what you guys are doing. And as you respond, I'll just take another moment to say, please do send us your questions. You can keep typing them right into the Q&A. I see we do have some coming in. And as noted, we'll get to those at the end. So do we have our findings up for that poll? Let's see. Okay, more aggressive sales and promotions. 41% of you are up in the game. 9% have been less aggressive with sales and promotion, and 50% are about the same as pre-COVID. So that is interesting. All right. As I said, questions, send them in. And now I'm going to turn it over to Jay. He's going to talk about same store sales and pro forma profit and loss.
Right, Maggie. So same store sales year over year. So again, we have two different sets of questions. We have retailers that participated in the survey last year and retailers that participated in the survey this year. We've talked about some of those numbers. Here, we've asked retailers to tell us about their own sales going back the year compared to the year before. So what you see highlighted here is group one, the high perishable stores with more than 50% of sales from perishables. They actually lost actual dollars in supplements and vitamins, down $4,600 in supplements and vitamins. You'll notice group three here has a whole bunch of red across here. This group had 21 to 30% of sales from perishables. Supplements were down, health and beauty aid sales were down, packaged dry grocery were down, refrigerated was just about flat, and frozen foods were down. Next slide, please. So here we're continuing with group three, a whole lot of red across all the categories. Fresh produce sales were down, prepared foods were down, a whopping 20% for them, which was $16,000. Bulk food sales were down, non-food and household sales were down, and overall, they were the largest loser of all 6 groups for the survey year, down 33,000 or 2% in sales. Now, I just want to draw your attention up 2 rows to group 1 under prepared foods. You'll see the $95,000 there that prepared foods took a hit, down 7%. This is what we would expect, and as you can see, this is definitely a factor having to do with COVID, when all the food departments, prepared foods departments, shut down precipitously in March and April and May, and struggled to come back, if at all. And also bulk foods right next door there, they also lost $14,000. But overall, sales held fairly well. Fresh produce, as you can see, was up $53,000 or 4.7%. So overall, they lost just about 0.5%. for all departments. So group one actually balanced out fairly well. Here we're going to just kind of look across the columns here, cost of goods and gross profit margin. The gross profit margin follows a rather linear pattern as perishables decrease from group one, where perishables are very high, down to group six, where perishables are almost nothing. Gross profit margin rises from 37% in group one to 40.8% in group six. So gross profit margin strengthens as the burden of selling perishable foods with high costs and lots of shrink decreases. The next column, labor, again, we see a correlation between high perishables and high labor expenses, 19.28% for group one, going all the way down to group six, where a vitamin supplement store is much simpler to run. You don't need the skilled butchers and culinarians. And so they're spending 13% on labor. For rent is remarkably stable at around 4%. And one of the things I would say about this is, going back to the beginning of who participated in the survey, these are incumbent stores that have been around for an average of 29 years. Therefore, they probably have some really nice sweetheart leases with some good lease rental rates, but also they've had time to mature in the marketplace and generate a very high level of sales, making rent an affordable 4%. For marketing, we also see a correlation between, if you're a high perishable store and you have a high amount of sales, you're spending a little bit under 1% for marketing, whereas you're spending 1.4% down in group six if you're a supplement store. And one of the interesting things about the survey this year is that for all the other expenses for stores, this shows some strength here, where we have around a minimum of 7% left over for all other expenses, on up to almost 13% left over for all other store expenses. To me, this indicates some strength in the category of independent retailer, whereas if new competitors were to come into the marketplace, they could cut and make do and make changes to kind of survive the onslaught of any new competition. Next slide, please. And here we look at net profit. So again, group one, 50% of sales from perishables. Their net profit was highest in the survey, $346,000, although one of the lower percentages, only 4.88%. As we go down to group six with zero perishables, net profit was $46,000, so the least of all six groups, but the highest on a percentage basis of 11.15%. For full-time employees, one of the interesting things about here, you see group one is highlighted. Now, keep in mind, the 2021 stores were 10,500 square feet. The 2020 stores the year before were 15,000 square feet. It took almost 5 full-time employees per 1,000 square feet in 2020 to run those stores, and about 1.5 full-time employees per 1,000 square feet less this year in 2021, only 3.5 full-time people per square foot. And so it's quite interesting to see the changes from year to year, but also how much personnel it takes to run these stores. And as you can see, a simpler store that's driven by vitamins just takes 2 full-time people per 1,000 square feet. Labor costs, the hourly wages, again, it makes sense if you have professional culinarians that need high skills and have lots of schooling, you're going to pay them more per hour. And then we can see that in group one, 18, almost $19 per square foot, and over 19% in sales. Going down to the vitamin stores, it's $12.50. And in this group six, I just want to point out that it's quite likely that as an owner operator in some of these stores, owners may in fact not be paying themselves a salary, which also would tend to depress the hourly wage for this group.
All right, thank you, Jay. Before we move on to talking about investing in growth, we have a poll here for you. And that is, how has COVID-19 affected employee turnover? So we'll have that up on the screen if you could take a moment for that. All right. We'll get those results up. And okay, so employee turnover, we have 40% say more than pre-COVID, 10% less than pre-COVID, and about the same 50%. All right. So let's look at what investments are going on. So we're investing in growth. Up here we have 14% expanded or remodeled last year of our survey respondents. Average expansion was 800 square feet, and the cost per square foot was a big old range of just over $17 to over $83. Looking at the areas that were expanded or remodeled, 66% of respondents who remodeled focused on frozen foods, another 66% on vitamin, herb, and supplement departments. We have half looking at the juice bar, cafe, deli, your bakery, that's your prepared food and grab and go, and 50% on refrigerated foods, and then smaller groups looking at fresh produce, dry grocery, personal care, body care, cosmetics, and practitioner areas. So that's 30% in each of those areas, and 17% each for dry bulk foods, herbs, non-foods, household, and pet products. Again, that's each of those sections. All right, looking at future plans. Coming up, 14% have plans to expand or remodel this year. Average expansion that people are planning is 1,400 square feet. And they're looking to spend per square foot $25 to up to just about $87. Which departments are getting an update? Again, 66%. We have the juice bar, cafe, deli, bakery, and prepared foods, grab and go areas. 56% looking to update the fresh produce department. 44% frozen, refrigerated, dry, bulk, supplement, personal care, and practitioner areas, each of those. 34% are looking to expand dry grocery, and 22% are focusing on non-foods and pet products.
Maggie, could I jump in here for just a sec with a quick observation?
Yeah, please.
So what I think is interesting about these numbers are that the juice bar cafe numbers, which is going to have the most update, is I suspect a downsizing. Think about the salad bars, the hot bars, the soup, and so forth, and all the rejiggering behind the counter, the chef's cases and so forth that are probably going to be rationalized and essentially reduced in footprint. So this is not necessarily an expansion, whereas all the other categories, fresh produce, frozen, are definitely expansion categories that we've seen with shifts in consumer purchasing this year.
Yeah, that's so interesting. And Jay, I know you actually talked to a couple of retailers about this topic, and that's covered in the in the June issue of the May issue of Whole Foods. So I'll get it in the May issue. So some retailers share some insights about what they're thinking in terms of the grab and go section and what their plans are. So that's an interesting read. All right, looking back at the end of June 2020, 41% of stores had increased total sales, 37% had stayed about the same, and 22% of stores had registered sales declines. Among those stores reporting an increase in sales, the median increase was 10%, and for those reporting a decline, it was 13%. And yet, forecasting 2021, we are so glad to be done with 2020. I think across the board, I can confidently say we are happy to be out of that. And optimism reigns looking to 2021. 33% of stores who responded said they believe sales will increase. 61% said they will hold steady. And just 6% think that they're going to see a decline in 2021. Among those who are forecasting an increase, the median increase they're expecting is 10%. And for those anticipating a decline in sales, they're forecasting a 10% decline. All right, so keep submitting those questions, please. I know they're coming in to us, and we'll get to them after this next portion of our webinar, in which Jay is going to discuss Retail Insights Retail Universe. So turning it over to you, Jay.
Thanks, Maggie. Don't freak out, everybody. This is the major table here, but we're not going to make you try to look at all these numbers. What you see here is the 8 channels that Retail Insights tracks every year that foods and natural organic foods sell through: club stores, compact grocers, independent retailers, mass merchandisers, pharmacies, conventional supermarkets, supernaturals, and vitamin chains. We're going to look at them in a much larger font on the next slide. So here we're at the top 4 out of 8 categories that we track. Club stores have increased by 9% in sales, a little over almost $500 million. They added 18 stores, and this is Costco and Sam's Club. So these are large stores, and these are their isolated natural and organic sales. So they have 6.6% market share of total natural volume. Compact grocers is probably the standout result for 2021. These stores grew by 25.65% at 198 units and increased $3.7 billion. I want you to keep that figure in mind as we go down this table and compare to the increase that Supernaturals had, which we'll see on the next slide. But for the moment, what's remarkable about these compact grocers, and that's our term that we coined in 2012 to signify stores that are no larger than 20,000 square feet. So stores that meet that model are Aldi, Natural Grocers by Vitamin Cottage, Trader Joe's. And so that group is really making a move in terms of their presence in the marketplace. Aldi, as we know, has a target of 2,500 stores in the next several years, up from about 2,100 today. Trader Joe's added a significant number of stores also in 2020. So Aldi, we actually added to the survey or to the retail universe last year because they have a couple $2 billion of natural organic products, which is kind of a real savvy move on their part to bring those products in. And so we've begun counting them. And that's why one of the big changes why the compact grocers have grown so robustly. At the bottom, the last row here, conventional supermarkets, as you can see, have fallen behind in market share at 18.99% compared to compact grocers at 19.77%. So conventional supermarkets are now 3rd place for market share in natural organic sales, and compact grocers are in the number 2 spot. Next slide, please. So at the top of this chart, independent retailers, it's quite interesting. As you know from the survey of independent retailers, they grew as a group 5.02%. But look over here at the right-hand side where they lost 345 stores, which was about 6%, 5.5% of stores. So what happened was those two things balanced out. The remainder stores that stayed open and continued to do business grew about 5%, although store count was down about 5%. The net of all that is a slight $16 million decline in sales, which was less than a percentage point, so 0.14%. So they are holding steady with their 4th place market share. Draw your eye down to the Supernaturals, the 3rd row in our table, and you'll see that they have a market share of 29.48%. Now that's still number 1. They are the leading market share, but look at this increase of $738 million. That's only a 2.77% increase. And I'll remind you about the 3.7 billion with a B that the compact grocer channel grew this year. Supernaturals were much less aggressive in terms of store count. Actually, total store counts declined by 12, and which is a 1% decline. That contributed to some of the lackluster results in this category. Vitamin chains, the last row in our table, continue to struggle. It's a multi-year decline. Stores are reducing. They lost 325 units, nearly 7% of the store count, and $31 million. Next slide, thanks. And so here is a summary of what happened. I'll draw your eye to the 2020 net natural sales, which is $92.7 billion. So that's the natural organic sales. And if you draw your eye directly down below it to total food store sales, this is the comparison that we are making. 92 billion natural organic sales to 756 billion total food store sales. And just to the left of that number, that 756 billion, is the 12.26% natural organic share of all food store sales in the United States. So we're kind of proud of that. If you draw your eye over to the 3rd column from the right, at the bottom, natural square footage of total food store gross lease area square foot, 4.53%. So natural organics make up 4.5% of all food store square footage. But going back to the far left here, that square footage is extremely productive as they sell 12.26% of all food store sales. So triple the productivity on a per square foot basis. So it was a great year. Sales grew overall. Again, if we go back to the third column from the right, change in sales from 2019, sales were up 7.3% for this year, and store count increased by 7.5%, 2,100 stores. So the category is robust. Overall, we're following 123,000 stores in all 8 channels. And so it's a massive undertaking every year, but we have a lot of fun doing it, watching how dynamic this sector is.
Yeah, thank you, Jay. Such valuable information that you're tracking there. All right, so we do have questions coming in, and we're going to get to as many as we can now. So please do continue to send in any questions that you may have. I'll get this question done right up top. Will this webinar be available on demand? Yes, we will post this on WholeFoodsMagazine.com in about a week, and we will share that with you. You'll be able to access it there. And so you can really get lost in all the data there and study some of those slides more closely. It's also available. Additional information and charts that we didn't cover here are in the March issue of Whole Foods Magazine, which is available online. And as I mentioned, that January issue is the one where retailers really sound off and share their experiences throughout the year. So it's a great read. I definitely recommend checking that out. So Jay, we have a question here for you, and that is, what is the optimal store size?
I had to unmute myself there. So I don't think that there is an optimal store size. It really depends on the fire in the belly for the operator. I mean, do you want to deal with perishable food shrink? Do you have the stomach for a fresh produce department that, you know, you're dealing with 2, 3, 4% shrink on a good day? Or do you want a simpler life and not to have to deal with all that stuff that crawls out of the boxes, but just deal with vitamins and supplements that have a 2 or 3 year shelf life? So the answer is, you know, what is the capacity of the operator really? And what I would say, though, that we did see in group 3, which was 24.6% perishables this year versus 26% perishables last year. It doesn't seem like a big shift, but what I would say is right in that intermediate range of perishables where you're not a vitamin pill store with 0% perishables or less than 10% perishables, and you're not a Whole Foods type store with 50, 60% perishables. You are below a quarter, about 25% sales. And that's a danger zone because you're probably not big enough as a footprint to attract that everyday shop for dinner. And you don't have enough of the fresh perishables to actually be a destination for that category. So it's a dangerous place to be. And in fact, we saw sales decline in group 3 to 1.5 million this year from 1.7 million last year.
All right, thank you. We have a question from Jonathan. Hi, Jonathan. Do you have any input or news on the buyer realignment?
So it would be good to clarify which buyer realignment.
All right, Jonathan. So if you can follow up with us, we'll get back to you on that. And another question here, would it be worth the risk for a small group 6 retailer to incorporate more perishables, or is it best to stick with their specialty?
And again, this needs a little bit of clarification. What is the definition of small? Do you mean small footprint? Do you mean, low sales? So again, a clarification there is important before we can answer the question.
All right, so feel free to follow up and we'll try to get you those answers. Okay, Tracy's asking, do you think the decline in educational materials is because brands weren't able to get into the store, in those early COVID days? And does that represent an opportunity for brands? She also asked, are retailers open to virtual education from brands and suppliers? And I will say that I follow a lot of retailers on socials, and all the retailers out there, let me know. I want to follow you on your socials too. I love keeping up with you guys. And I see a lot of the virtual education going on. I really saw a lot of that in 2020 and now into 2021. But yeah, I would say I'm sure that it hurt in those early days, the brands not being able to go to the stores and do the same outreach, and sure, there's an opportunity there to connect more, and just a win-win for everybody. Jay, do you want to comment on that?
No, I agree. I think the answers are yes to those questions. The decline in availability had to do with the fact that the stores were shut down and couldn't do that. And I think, yeah, the reality today is we do have to be open to virtual learning.
Yeah, definitely. And it can be really effective. I've attended just some great Facebook Lives and, fun, engaging, and learn a lot. Okay, so we do have a follow-up on the question from Jonathan. He says, according to the letter to team members, Whole Foods is merging its global and regional merchandising teams into a single team that will support purchasing across the entire company. Dedicated operation teams in the region will focus on merchandising execution and in-store operations, including e-commerce and store support. The company is also creating new leadership roles focused on local products and supplier relationships.
Okay, so yeah, I suspected that Jonathan's question had to do specifically with Amazon Whole Foods, since they did make this announcement, I think, just this week. To me, going back 25, 30 years into the 1990s, when Whole Foods was just going gangbusters and kept increasing the size of their footprint from 40 to 50 to 60,000 square feet. One of the things that they touted was their advantage was the fact that they had 11 or 12 autonomous regions in the country that could pay attention to local vendors, that could have great discretion in terms of the assortment and how they chose. And one of the struggles has been to kind of make that consistent across the nation. And I think it's still a work in progress. I think that this is an outcropping of that effort, but I think something will be lost. I think while they're giving lip service to the fact that there's going to be more sensitivity to local products, I suspect that is going to be a real challenge, and that we're not necessarily going to see more shelf space allocated that way. I think it's going to look more and more like a conventional one-size-fits-all type approach, where there really has to be a corporate level of consistency that is very difficult in such a massive organization to do otherwise.
All right, this next question is interesting. Jay, I'm going to throw it out there. I don't know if you have, this is not something that I know the answer to. Let's see if you have some insights into this, but regarding the rent as a percentage profit, any insights into how this might change going forward? Does this correlate with regular real estate market trends?
Oh, it's a fantastic question. And we do have some information about this, because obviously what's going on with the retailers out there, they are the silver lining, if you will, of the pandemic was that formerly unavailable expansion spaces were suddenly available. With brick and mortar struggling the last several years, the pandemic kind of put the kibosh on a whole bunch more businesses. So all of a sudden, many of my clients, independent natural products retailers, by the way, had developers and landlords coming to them with new offers to take expansion space. And so it actually is a time of opportunity and a time of risk. But I would say that yes, we did see a dip in rents as the vacancy rates jumped up in the metropolitan areas like New York and San Francisco. But of course, that was coming down from a very, very elevated level. So I mean, whether it went from $150 a square foot to 130, I don't know if you have the stomach for that, regardless. But yes, I mean, rents do follow the market. And to a certain degree, I think certain independent natural products retailers will benefit from this if they are careful and negotiate with a hard nose.
All right, here we have a question. Looks like expansion in store is geared towards convenience. Is there any insight as to whether this convenience will take a dip for the next survey?
Hard to say. I think that's right. When we say convenience, if we define convenience as reduced variability in the prepared foods program, I think that's true. So more grab and go, less self-serve, less shared utensils, and so forth. But we're just going to have to wait and see.
All right, so stay tuned for the answer to that, right? Looks like specialty stores are remaining strong per their percent increase in sales over 2020. Any insights as to why?
Absolutely. Great question. Thank you for that. Um, uh, what we saw very early on in the survey is that folks who were locking down and quarantining and limiting their shopping trips preferred going to smaller stores and preferred actually going to specialty stores where they weren't going to spend as much time, where they felt safe and where they could actually talk to somebody that was knowledgeable. So again, another silver lining to the pandemic, and in that 5% increase number that we saw in the independent sector in the survey, that's made up of a number of record sales for certain independent retailers that did very, very well in 2020. The pandemic bringing in new customers, bringing in lapsed customers, customers who had maybe shopped in years previous and were all of a sudden rushing in for advice on immunity.
All right, we just have a couple more questions. We do have a little bit more time if anybody else has questions out there. Another question here is, they're the best performing category in groups 1 and 6. Wait, how does group 1 compare to super centers in the other retail categories?
Yeah, that question is going to need a little bit of clarification.
Yeah. Okay, so if you want to clarify that, we'll get that answer to you. And then we were asked, you decided to add Aldi to the mix this year. Why now? And what trends did you say that put them on the map? What trends?
Thanks for the question and the opportunity to clarify. So I think that Aldi has been the sleeper competitor for most of its existence in the United States. They were a hard discounter, rock bottom prices, and 80 or 90% of the assortment was private label brands that nobody in the United States had ever seen before, because it's all control label. Well, here's the big secret. It doesn't take much to change the ingredient standard to the products that you're putting on the shelf. And they don't even have shelves. They just bring things in on pallets, right? So it's an extremely efficient operation. But what they smartly did in the last couple of years was to say, you know what, we can change the ingredient panel to reflect more natural and organic products. And of course, they are dedicated to being rock bottom pricing. So you're not going to pay more for a comparable product in Aldi. And so what's happened is we estimate that they are doing a couple $2 billion of natural organic just by the fact that they have begun to premiumize part of the assortment. It's nowhere near their, much of their sales. It's almost a rounding error in terms of their sales, their internal sales, but a couple $1 billion in terms of natural organic does get on the radar screen. And that's why we added them to the database.
All right, I just want to say, Alina said, follow us on Instagram at Mastel's Health Foods. I gladly will. And if anybody else wants to shout out in the chat, I love this industry, how much we support each other. So happy to follow and see what you guys are up to out there. So throw us a line. One more question here is advice for retailers. Any advice for retailers holding out on delivery and online ordering?
Well, I'll go back to the CEO of Albertsons, which is a couple thousand stores, conventional supermarkets, who said it's a break-even business for them, and that what they have to do is they have to start building dedicated fulfillment centers outside of the stores in order to lower their labor costs in picking these orders that are from online and are either being delivered or picked up in store. I think, where I come down on this is if you're a multi-store chain, then the pressure to do online for delivery or pickup is greater than if you're a single unit store or even a couple of units. If you're 1 or 2 units, an independent natural products retailer, and you're intimate with your customer in terms of that interaction, I would hope that you'd have the strength to really consider carefully before you start going ahead with delivery and pick. I think curbside pickup is fine, and in fact, I think most stores have actually done that. You would allow somebody to come to the store for whatever reason they have some sort of limitation, some disability, and you would bring stuff out to their car, and that's always been the case. So I think that just continues. But to mount an online or e-commerce or using a third-party picking and delivery service, it is not profitable. You are also removing visits from your store. And so I really hope that anyone considering that hasn't done it, that there's only a 1, 2, or 3 unit retailer would think twice about before opening up that service, because it'd be hard to take it back.
All right. And our last question here, and we are just about out of time, but we were asked, we just got another great question. Okay, 2 questions. We'll squeeze it in. Sorry if I missed this, but how many total stores responded to the survey?
Yeah, I mean, we kind of protect that number. It increases every year, and it represents multi-billions of dollars worth of the independent sector. So it's measurable, but it's kind of proprietary.
Yeah, and I would take that opportunity to say, anybody out there, if you didn't get the survey last year, if you're an independent natural products retailer, we would love to have you respond this year. We send it out every year in about mid-July and August. So please do email us. My email is editor@wfcinc.com. Email me and we will get you on the list for this year. We would absolutely love to have you participate. And if you do participate, please fill out completely. That's how we get the usable data for you to go through. We know it takes a little bit of time, but it is greatly appreciated. So I am going to end before we wrap up. Just Jay, I am so curious what you say about this. We were asked by Rachel, since you've been analyzing these reports for years, what's the most shocking piece of data you've seen?
Well, so I reserve the right to define shocking in a good way. To me, it was the almost doubling in the number of private label supplement carriers. It went from around the low 30% of stores carrying private label to almost 60%. And I think that it has something to do with the different participation group, the different cohort that we had this year versus last year. But it also says to me that retailers have realized that if they're going to differentiate, one of the best ways to do it is through private label.
Excellent. All right. So we're going to close out the questions. We'll move on to the next slide now. That has my email address up there. So if you want to participate, if you have any other questions or comments or suggestions, we welcome them. Please email us. I want to say thank you once again to Nutrisource for sponsoring this. And did I mention that Nutrisource has this really great podcast their team puts out? If you haven't listened to that, go check out their website and give that a listen. It is great. Again, there's more to love in our issue. We have the additional data online, so you can check that out. It's all available on WholeFoodsMagazine.com. Before we say goodbye, I want to invite everyone to join the team at Whole Foods Magazine and Trust Transparency Center for upcoming events. In June, we're going to take a deep dive into the active nutrition market, and in September, healthy aging. Registration for both of these events is open. We have a fantastic lineup of speakers. I am so jazzed. Visit naturalinformed.net for all the details and to sign up for those. And finally, if you're in the New York City area, if you're in New Jersey, come see me tonight. I'm going to be at What's Up with Sups event in New Jersey for networking, and Whole Foods publisher Heather Wayner is going to be there, along with a lot of our industry friends. We're going to play some Pac-Man. I mean, my goodness. So this is my first in-person event since this whole thing went down. So I'm excited. I would love to see you there. If you're in the area, come on out. And then just stay in the know. You can subscribe to our newsletters, follow us on socials, and keep up with all the industry news. And with that, I want to thank Jay for joining me. Thank the team who is running the show behind the scenes for making this go off without a hitch. And thank you to everyone who joined us. And thank you to Nutrisource. It's been great talking with you all, and I wish you a fantastic day.